Good morning, good afternoon, good evening, and welcome, depending where you are on the planet. And welcome to today's Bull versus Bear webinar for Trade Day. Steve Miley on the call in here on Thursday, the 21st of April. So we're going to go through our usual normal run through today. We'll take a look at the calendar, what we've had, what we've got coming up, do a little recap from yesterday, look at the calendar, both the macro calendar, fundamental economic calendar, the big calendar, and also the earnings calendar, see what we've got coming up in the US earnings season for today. We'll also take a look at articles from the major news wires to see what the macroeconomic, geopolitical, and fundamental changes have been, and what's going on, what's headlining markets right now for the major news wires. And then we'll take a look at some charts, see what's going on. So just a little recap on yesterday. So yesterday we saw a real choppy day yesterday. We saw a real underperformance in here by the NASDAQ, primarily due to Netflix. So Netflix subscriber numbers were down for the first time in a decade. This was now not, remember last night, this was the night before. That weighed on the NASDAQ through the session yesterday, with tech getting pulled lower. We also moved to still higher yields, lower prices on the bond chart. At one point yesterday, we did then get a rebound though yesterday. Higher prices. This is higher prices. Remember, lower bond yields. So, and although yields have gone back to lower prices, higher yields this morning, but we're still not at the extremes we saw yesterday. But nevertheless, Nasdaq was a big underperformer yesterday. If we go and take a look, I'm going to kill this page because it's telling me. Don't want it to slow everything up in here. But so Nasdaq was an underperformer yesterday. And if we look at the US in here, where we ended up. So in here on US stocks, so we see the Dow is actually up on the session by nearly three quarters of a percent. S&P unchanged. Nasdaq was down over 1% though yesterday. But then we did get a strong rebound this morning, so we're back up 1% in here. And I don't know why the Nasdaq composite in here never shows on this graphic. It never shows the change on the day. It never shows it in here. This is frustrating, kind of annoying. Nevertheless, we've seen, if you look at what's happened in here this morning, we've seen healthy rebounds in here this morning. We'll talk about that shortly. So Nasdaq leading the way back higher in here, but S&P up 3/4, Dow up like 0.2% in here. And the primary reason for that has been Tesla data yesterday. So I've got the earnings calendar in here, but I'm just going to go back to yesterday's data. So beating expectations in here, Tesla, both on the revenue and EPS, but also Elon Musk was really upbeat. Elon Musk Tesla race ahead of rising costs and price hikes. He spoke about they mentioned optimism about overcoming supply issues, 2022 production to top 1.5 million vehicles. So can't make more than doubles revenue from regulatory credits as well. So we've seen in here a really strong rebound in Tesla, and that's helped the whole tech sector in here overnight as well. Going back to the earnings calendar, while we're there, we'll go back into today's earnings calendar. Nothing I think that's going to really impact the major indices in here for today, actually. So we have Danaher, Philip Morris, Union Pacific. I don't think these are not the kind of stocks, AT&T as well. These are not the kind of stocks that generally have a massive impact on the major indices. Okay, so I'm not expecting too much from these. Well, actually, most of them are out already. If you look, you can see we've got a sea of green really. The odd red blip in here, but so nothing really to focus on significantly. Most of those earnings reports are already out in here today. Excuse me. Turning to the macro side, the fundamental side, macroeconomic side, we had CPI this morning out of the Eurozone, which is actually quite encouraging, for March, below expectations in here, across the board, the month-to-month, year-on-year, and the core CPI, all below expectations, not massively below expectations. Are we already hitting and getting towards peak inflation? So that's been a topic we've been discussing in here over the last week or two. Is the data we've had, the most recent data from the various economies, major global economies, are we seeing those inflation numbers getting close to or at their peaks now? And that's going to be really interesting to see, because if we start to roll over, and also we spoke about peak hawkishness. I've said this for about a week now. I think we're getting really close to that peak hawkishness, peak inflation data. And if you see any rollover of those, we could easily see, we saw yesterday's In yesterday's webinar, we discussed that Bank of America put out a note yesterday to buy bonds. They think we're going back higher in price, lower in yields. They think we're kind of at peak inflation, peak hawkishness. And so there's an opportunity to buy bonds at current levels to see those move back higher in price, lower in yields. Okay. Maybe we've gone too fast. Okay. So market needs to kind of a corrective rebound in bonds in the short to intermediate term. So, and I'm in agreement with that. I think we are at kind of peak inflation, peak hawkishness, and we could easily see a rebound in those bond markets. And if we do, it's probably almost certainly going to help equities as well. Lower yields, particularly going to help the growth stocks, going to help the NASDAQ, leading markets potentially back higher. Going into today, though, the focus is going to be on Powell. Now, it's got him down as speaking twice. I've looked into this. So if you look, he's speaking today at the Volcker Alliance and Penn Institute for Urban Research special briefing and at the International Monetary Fund debate on the global economy. Well, the 11 o'clock meeting in here, he's doing the welcoming remarks via a pre-recorded video. I don't think that's going to be too insightful. Okay, so the 11 o'clock, this is 11 a.m. Eastern. I don't think that's going to be particularly interesting. Okay, it's welcoming remarks. Okay, from Powell. Okay, 1 o'clock, however, is at the IMF fund debate on the global economy. Okay, so there's been IMF meetings, International Monetary Fund meetings all week, and he is talking there. It looks like it's in a discussion group. Okay, so that is going to be far more interesting, talking about the global economy, obviously with all the challenges we're facing with respect to inflation, rising interest rates, and supply chain issues, the yield curve, and obviously the war in Ukraine. So that's going to be the one probably to watch, which we have, as I say, there at 1 o'clock Eastern time. And then at 1 o'clock, also Lagarde is speaking. Christine Lagarde, head of the ECB, president of the ECB, is also speaking at the same time. So that could be interesting as well, particularly in the light of what we've had in here. So if you want to listen to this live, by the way, you can go in here to the Fed. If you just type in Fed speakers agenda into Google, you'll find this. This is actually the Federal Reserve's own site. Okay, and if you scroll down, it gives you all the speaking engagements. And you can hit the watch live. That's not the right one, but you just go and it's got watch live for today's one. So you can go and watch that live. Okay. Right. Before I go to 5 things to start your day, where is it? Oh, yeah. So it is picked up in here. I'll just jump down to it. So above zero in here. Traders are betting the ECB, European Central Bank, will raise rates above zero this year for the first time since 2012 after a string of hawkish comments from policymakers in here. I've probably already got this one opened up. Yeah, so here we are. So Wunsch in here, I think that's the correct pronunciation. Okay, Belgian official says ready to consider a July rate hike. Okay, so we had that in here. We also had in here pace of ECB rate hike jolts markets with July hike on radar. Rate path will hinge on projections. Guindos, okay, also speaking in here today. So that's Luis de Guindos is the vice president of the ECB. Okay, as we say, there's Christine Lagarde. We do have Lagarde speaking later today. So 2 ECB members in here today. Guindos in there. There you go. Luis de Guindos, and also Wunsch in here, both saying in here, potential Pierre Wunsch in here saying potential for a rate hike sooner rather than later. And that's seen the euro higher. So the euro has gone higher against the dollar. Currency markets are pretty quiet, been quite volatile recently. The dollar's been really strong, as we know, against most currencies. But the euro, most currencies are flat against or very little change against the dollar in here today. If I just go and see, do we have an obvious place for that? Let me see if I've got one just on FX rates. Let me see if I can quickly bring that up, if I can find it quick. But, pretty much across the board in here, FX rates are kind of unchanged in here. Here we go, currencies. So we're going to take a look at the currencies, major currencies in here this morning. Once it loads. So you can see in here, Aussie, little change, pretty much unchanged. Canadian dollar, little change. And then in here we have, where are we? The pound in here. But we see in here the euro versus dollar. It's actually, this is actually around the wrong way. This euro is up about 0.4%. Okay, euro up against the dollar in here this morning. Okay, so yeah, it's quoting it around their way. It's dollar euro. Okay, but it's euro dollar is up in here today, so significantly, notably higher in here. So yeah, we're seeing a strength in the dollar, the euro, sorry, by about 0.6% on the back of these definitely more hawkish comments that we've seen of late from ECB members. Okay, and despite those hawkishness from ECB members, they're picking up on here. Stocks finding some uplift so far in the session. So European stocks, despite hawkish ECB chatter. So despite the hawkish ECB chatter, a stronger currency and higher rates should be negative for European stocks. But European stocks, if we go and take a look in here for the European stock indices this morning, you can see we're up across the board. DAX is up over 1.5%. FTSE's only marginally up, but if you look at some of these other indices in here, up about anywhere between 0.5% and 1%, some of them over 1.5% higher in here. So European indices benefit despite the strength in the euro. And then we've also got this rebound because of the Tesla strength in here. If you look, so we said about this was yesterday's price action, kind of mixed with the Dow up, the S&P flat, and the Nasdaq down yesterday because of Netflix. If we actually looked at what's happened overnight on the futures, we've got all the main indices in the US futures are up, led by the Nasdaq in here, which is up over 1% higher in here, S&P 0.75%, and the Dow about 0.2% higher. So futures are up across the board, stronger in here this morning. Have I missed anything as I've gone through in here? US futures rise on earnings boost. So yeah, the earnings boost coming from Tesla really more than anything else. And also we did look at the earnings calendar, previously. I don't know if I've shut that one down there. I think I have. But the earnings calendar is showing us that most of the stuff we've had reporting so far today, even though they don't usually have a massive impact on the indices, they are across the board pretty much higher to beat expectations. Okay, what else we have for you in here on these? So we've looked at that. Reuters, we looked at that. Bonds in here. Bond yields resume rise, so we are, but we've already looked at it, and they're not, even though we are higher in here. So we've got we've got going slightly lower in price, higher bond yields. We're nowhere near back to, well, not nowhere near, but we're not approaching the yield, the price lows, the yield highs that we saw last 36 hours or so, 48 hours. So even though we're dipping lower in price, higher in yield, not significantly to break to new high yields, low prices at the moment. If we look at the Fed chart there, the CME Fed Watch tool in here, I've just looking before we came on the webinar. So look, basically completely nailed on. This has been continuously rising. This is for the next meeting. I mean, basically nailed on that we've got a 50 basis point hike at the next one. But looking further out to the June meeting now, okay, now this is overtaken this one in here, if you remember from yesterday. So what it's saying is in here, there's only a 2% chance they only go 25. So it's basically nailed on. So in May, we go to 50, and in June, looking for another 50, but now more of a chance of 75. If you look at the current target rate here, we are 25 to 50 is where we are right now. Okay, so pricing in now a 55% chance of it being 150 to 175 after the June meeting. So that's up 125. So that's basically saying 50 in May and another 75. So more of a chance now of 75 being priced in by the market. That feels to me too hawkish. I mean, there's not probably that many Fed members who are going to be voting for 50. It was only 2-3 weeks ago we were talking about 25s. Now we're talking about 250s and maybe a 50 and a 75. Just because one Fed speaker, the more hawkish, when we spoke about this previously, Bullard, right, was touting the 75, doesn't mean that that's going to come. But I think the market's getting a little bit ahead of itself, a little bit more overly aggressive on what it's pricing in on rate hikes. So what else do we have in here? Let's look at the charts then. So we've already discussed this one in here. Oh, one other thing that just came up in here I did want to mention. So Macron and Le Pen, I know in the US you guys probably don't focus on this so much. This is quite a big deal. It's the French presidential debates in here. It's the second round. Obviously, about a week and a half ago we had the first round. Now we have the shoot off between Macron and Le Pen. And there was a televised debate last night. And the outcome of that was probably that Macron did better than Le Pen in here. And so the CAC has led markets higher in here, although we've had, a jump across the board. But CAC, which is the French stock index, is up over 1%. So that was seen as Macron probably doing better than Le Pen, which is positive for the markets. Okay. Right, let's go take a look at, yeah, so let's take a look at the indices. First of all, I'll start with the S&P. So a strong recovery yesterday, even higher again in here this morning. And if we zoom in onto the 30-minute chart, it's a real strong little uptrend built now. High highs and high lows. We spoke about these levels, right? These highs in here and here. For this to be a better basing pattern, we now have a succession of higher highs and higher lows. I don't see much reason to push up towards 45.20 in here today, maybe a little above 45.20, 25 kind of area would be my feeling in here. I don't see in here at the moment how you can do anything other than buy this, right? So for me, this is looking bullish. And similarly with the NASDAQ, in here, not quite as bullish in here this morning. We did get the setback, not underperforming because of Netflix yesterday. So it's kind of a sideways day yesterday. Indecisive candlestick, but look, up in here. So not as bullish in here from the NASDAQ. If we zoom into the 1 hour chart, so you can see not really completed that base yet. It did just pip above the peaks here, but not quite above this peak here, and then fouled back lower, so we had a significant sell-off in here, and then the market now trying to get that back. If we take out this peak, I do think we will get an attack on up to here today, back up to like 14,300. If we go through 14,300 and can hold through there, this could easily add on quite a bit over the next few days. The market is certainly short of these value stocks, or it's underweight of the value stocks, and we could easily see, sorry, not value stocks, forget that, growth stocks, growth and tech sector stocks, right? The market, it feels to me that the market's underweight of these now. And there's a lot of value in there. If you look at some of these big names, they're trading way off their highs. You look at your Apples, your Amazons, your Googles, right? They're trading a good 10% plus of their highs, some of these stocks. And so there's real value in some of these stocks at the moment. So I do feel that there's, that's probably a bigger picture outlook, but even on the short term in here, I think there's plenty of upside there. Let's flip across and look at the sheet with the, remember on the June contract now for oil and gold. So in here, first of all, let's take a look at the daily on oil. So hesitant yesterday. So we're kind of back into this choppy range, right? It looked like we're breaking out to the upside. We had a big down day 2 days ago. Yesterday we went lower and then rebounded and trying to rebound and fading today. So choppy sideways, kind of almost back into the midpoint of this whole range. If you look at the bigger range, I'm going to put a couple of Fibonacci retracements on in here. For the whole range in here since the high, okay, I'm going to take that across to there. Okay, and I'm just going to go in and just get rid of the everything apart from the 50%. Okay, so look, we're sitting nearly on the 50% of the whole range. And if you look at this narrower range in here, this one from here to here, yeah, I'm going to put that one on as well. Look at this range here. I'm going to do the same thing. We're going to just untick some of these boxes, a little bit of 50% is on that as well. Okay. It's just, and we're bang on that one, right? So this range in here, we're bang on it right now, and it's just a little higher. So, what do you do? The market's it's in a, this is the range, established from the beginning of March, right? Beginning through to mid-March. And then we're still right in the middle of that range. So this is like a 5/6, maybe getting into 7-week range now, 6-week range, probably a 5-week range. I think the high up here was early March, the low down here was mid-March. So we're probably a 5+ week range in here, and the market's pretty much right bang in the middle of it. Having tried to break to the upside last week, kind of rejecting that through the early part of this week. And if we step into the 30-minute, what are you going to do in here? I've got no strong view on that. Really, no strong view. You hold a gun to my head, I'm minimally bullish, but I mean so minimally bullish. I wouldn't trade that. And then if I go to gold, it's not so dissimilar, right? We're probably below the wider range. I can do the same thing on gold. Put these fibs. Oh, actually. Take that out, and then actually I'll save this so it doesn't happen again. So look, there's the 50%. We're way below the middle of the 50% of the bigger range. Okay, the much broader range. If we go to this more narrow range, taking out the just this one through here, right? This more recent range. You know, there's the 50%. We've just gone back below the 50% here. So, you know, this looks certainly more negative, right? So I think this is a little one easier to trade if we go into the 1 hour chart now. You know, it's kind of fallen out of bed this morning. So big sell-off in here the last few days, tried to rebound. If we look at where it rebounded to, without, so this has been doing this for so long, this is going to have failed almost, I can tell you, right bang or right near the 38.2% retracement of this move. You watch. So that's not working. Let me put the 38.2 back on. And how are we going? Didn't even get to the 38.2. Look. Fell below it, and look at that little failure high there, failed that failure high, and now we're making new lows. I think this is still worth a sell. If we go back to the daily, it's already had a significant move lower today. High low today is about $20, you know, but this can easily move like $35-40 in a day. So yeah, I could easily see us, you know, we're breaking the low. I could easily see us back down into here towards like 1930, maybe 1925. So yeah, I think this is, you know, you're selling into the hole, as they say. But, you know, if we get any kind of bounce, if it doesn't bounce, you know, I think you just sell it. But I mean, if you get a bounce into here, you sell into the bounce as well. So gold looking very negative as well. All right, guys, I'm going to wrap it up there. I'm going to wish you all, as ever, a great trading day. Stay safe out there. I'm not going to be on the webinar tomorrow. You have James tomorrow. James is covering me, so I'm not able to make the webinar tomorrow. So have a great weekend as well. And I'll be back with you with a Bull Webinar on Monday, and James will be on the webinar tomorrow. Take care. Stay safe.